Good morning, everybody, and bore da. My name is Paul James, and I work for the export team of Welsh Government. And I'd like to thank you all for joining this webinar this morning on Rules of Origin. Before we go into the webinar, I'd just like to do a few housekeeping with you. Just to let you know that the webinar is going to be recorded and will be uploaded to the Business Wales Export Zone. And we will send you links to the webinar once it's uploaded. If you'd like to ask any questions today, please use the Q&A function to post any questions, and we will answer these at the end. And after the webinar, we will be emailing you a short questionnaire for some feedback on today's webinar. If you could complete that and return that to us, we'd appreciate it, because we use that information and to help us to improve and look at different subjects moving forward. So thank you again this morning for joining us and taking time out to, in what's probably very strange times and fast changing times at the moment too. I'd also like to thank Winning Pitch for working with us on the webinar this morning. In particular, Mike Wilson of Go Exporting. Mike's got over 30 years experience of working in exports, so I'm pleased he's able to join us today to talk about this important subject of rules of origin. As you know, we're approaching the end of our transition period with the EU. And many existing trading agreements are going to change. We're not sure yet what that agreement with the EU is going to look like, but we've also got new ones coming in on the horizon with, for example, with Japan. Understanding rules of origin will become even more important as these trading agreements change, in particular, understanding which duties apply. This is a really interesting area and an important area. So I'm not going to talk any much more about this. I'm going to hand you straight over to Mike now, who will talk us through the rules of origin. Thank you.
Thank you, James. Thanks for the invitation to present this webinar. Thanks for the introduction. So my name is Mike Wilson. We're going to look at understanding rules of origin and their importance post-Brexit in particular. So first of all, just a run through of what we're going to cover. What are rules of origin? I'm going to explain what they are and how they're important. The different types of rules of origin, for example, non-preferential and preferential rules, how those work in practice, in particular for you, what that means for you, and how you actually determine and claim origin for your products. And then we'll look at the Brexit effect towards the end, followed by a summary and Q&A. But first of all, I'd just like to introduce myself and my business for just a few seconds. As it says there, Go Exporting is a specialist export consultancy that successfully launches businesses into new international markets. You could say that export is our passion. We're passionate about helping companies to expand their exports to improve their profitability in international markets. So I established Go Exporting a few years ago. We have a global network of associates, so we can cover every country. Over 30 years experience in export and international trade. I've worn out many suitcases and gained a lot of air miles, not to mention grey hairs. And we are specialists in everything to do with export, from export readiness, from preparing companies for export, through to assessing opportunities, developing and implementing strategies to open new markets. And we've worked with startups, SMEs and multinational corporates over the years. We also are the authors of the 7 Steps to Export Success ebook, which can be downloaded from our website, which is a program that we use for helping companies to create export success. Straight into the first section, what are rules of origin? We're going to look at your product nationality, why is origin important, and is origin not obvious? Some people may think that it should be obvious that the origin is where you're based. And then we'll look at the need for rules. But before we do that, we'd just like to do a quick viewer survey, if we could, so that we can just get a feel for how regularly you export. So I'm just going to launch the polling. I'll just give you a few moments. Okay, that seems to have covered everyone. So Okay, so hopefully you can now see those polling results. So we can see there that most people are frequently exporting, 68%, 21% regularly, and just a few infrequently or never. So that's good. They're all regular exporters. Okay, so what are rules of origin? It is effectively your product nationality. It's the economic nationality of your goods. In effect, it's their passport to the way they're dealt with in international trade in terms of the duties, standards and compliance. And it can have a profound effect on your international viability. You could say, looking at Brexit, this is the greatest Brexit challenge that you've never heard about. Whether we reach a free trade agreement with the EU or not, we're going to have to look at rules of origin seriously moving forward. As we know, a free trade agreement is becoming ever more remote possibility, with both sides playing hardball, the UK even threatening to break international law. Hopefully that's going to change and we'll come up with an agreement in the end, because as we'll see later on, it is very important that we do reach the right kind of agreement with the EU. Why is origin important? Over the world, there are £12 trillion worth of goods that are traded annually. Now you can imagine how many transactions that is, how many shipments that is around the world. And authorities need to keep track of them. They need some way of monitoring what's going on and making sure that goods are being shipped where they should be being shipped and not vice versa. So the origin of each shipment does need to be declared and needs to be monitored, and for statistical purposes and obviously for imposing the correct duties on the goods once they arrive in the destination country. We also need to ensure that product standards are correct and have been agreed, and to guard against product dumping, so where one country has got a glut of product and tries to sell it cheaply into another area and dumping the product into that area. So there are rules to try and safeguard against product dumping. And it's also rules of origin are used to ensure compliance with any relevant trade agreements. So they are the basis of statistics and trade data and compliance with relevant agreements around the world. So you could say, is origin not obvious? Isn't it where the goods are shipped from? It may seem logical at the beginning, but no, it's not. Where they're shipped from is just the point of start. It could be that the goods have come in from Russia into the EU, and then they're shipped to Japan, for example, where there's a free trade agreement. And if you just use where the goods are shipped from last time, then it could be that you're getting around the free trade agreement and claiming preference when none should exist. So where goods are shipped from is not an indicator of the origin. Is it where the final goods are produced? Well, it could be, but not necessarily. These days, there are very complex supply chains. Components and raw materials can come from many different countries. And because of that, it's difficult sometimes to judge where the origin of the product actually is from. So it can be, what is the percentage of the final product that is actually originating from the particular country? Just being assembled in Wales, for example, doesn't make the product a Welsh product if all the components have come from outside. So it's not obvious, and we need to follow certain rules to be able to see where goods actually come from. I'll give an example of why it's not obvious. If I have a washing machine which is assembled in Wales, for example, the inlet control valve may come from India, the drum from France, water pump from Germany, seals maybe from the UK, electronics from Taiwan, and the casing from the UK. These are just made up examples, but you can see the difficulty there in actually deciding where the origin of that product has actually come from. So in reality, it really is not obvious. And for that reason, we do need rules. Rules are required to determine origin. One of the difficulties, though, is that rules vary country to country. Even under World Trade Organization regulations, every country can set their own rules of origin. Dependent, therefore, on trade agreements. Where there's a trade agreement that exists, that stipulates what the rules of origin should be for that particular agreement. And the idea is to stop fraudulent claims for preference. So as we just looked at the example of, for example, shipping from India into France, say, to gain preferential duty for shipping then into Japan, where there's a free trade agreement with the EU. So the rules are designed to try and stop that kind of thing. And it's all based on the harmonized standard code, the HS code of the products that you're exporting. As we have many regular exporters, you'll be aware of the HS code. And that is the starting point really for governing the rules of origin for your product. So now we're going to look at non-preferential and preferential rules of origin. Why are there two sets of rules? What is the difference? And is it worth the effort actually looking at gaining preferential rules of origin? So there are two sets of rules, and the reason is it depends on the relationship between countries. For example, does a trade agreement exist with preferential trade terms? That would be a preferential trade arrangement, preferential rules of origin. Currently, we follow the EU trade agreements on preferential terms. So the EU has trade agreements with 39, 40 different countries and many more pending, and we are party to all of those agreements. So we're able to benefit from the preferential terms that have been negotiated by the EU. Post-Brexit, that will not be the case anymore. We'll be on non-preferential terms unless the UK achieves separate trade agreements. And that could, again, have different effects. That could have profound effects. We are looking to mirror, the UK government is looking to mirror the EU trade deals, but that's not straightforward and is not guaranteed that all of those will come into play, certainly in time for the beginning of next year. So what are non-preferential rules of origin? Non-preferential rules of origin are, generally this is what we're talking about when we talk about WTO rules, or most favoured nation status. It determines the country of origin for trade statistics, for labelling requirements, for trade policies such as quotas and anti-dumping. And they're only used where there is no specific trade agreement for reduced or preferential duty rates between the parties to the agreement. So each country establishes its own non-preferential rules, but they are based on similar principles, which we'll look at in a moment. So there are two main principles for establishing non-preferential origin. Firstly is wholly obtained. The products are obtained entirely from the raw materials or products of one country without any additions. This is often summarized as grown, born, bred, or mined within the country. It could be that all components are sourced from within one country as well, but that's very unusual these days and very unlikely. The second way that rules of origin can be proven is through last substantial processing. So that's the final country where the last major economic working or processing or transformation of the product has been carried out. These are the two main ways for establishing non-preferential origin. Some examples of wholly obtained products: wheat or flour, for example, milk, olive oil, onions, eggs, beef, mushrooms, so things that are grown or harvested within the country. Tomato sauce, again, that would be correct if the tomatoes were grown in the country, but not if tomatoes were shipped overseas and then produced into a sauce. So there's wholly owned products under rules of origin definitions. Then we have preferential rules of origin. Now, preferential rules of origin determine origin where a trade agreement exists. And this is an agreement between two or more countries that they're going to have reduced rate of duty and preferential rate agreements, preferential trade between those parties. It is established that goods qualify for preferential duty under the terms of the agreement. So, you know, if a good is being shipped from the EU to Japan, you need to make sure that the goods originate in either of those countries so that the free trade agreement that we have between the countries is applicable. But these agreements, these rules can differ with every trade deal. Generally, there's a higher bar for proving origin under preferential rules of origin than there are under non-preferential rules of origin, particularly because you're getting an enhanced rate or a reduced rate of duty. And also, not all goods may be included. Some trade agreements actually exclude certain goods from those where one country feels that that's their proprietary goods, for example, or they want to protect their own industry. So not every good will be covered by every free trade agreement. And it's important that when looking at rules of origin, you do check the actual agreement itself to make sure that your goods are actually covered. So to claim preferential rules of origin, you must meet the criteria that's laid down in the trade agreement. Generally, as we've said, it will confer a reduced or a zero duty. And again, there are two main principles for proving origin under preferential rules, but there is greater control over proving wholly owned origin. So wholly obtained, again, goods which are wholly obtained in one country without additions, as we saw with a preferential. That's a clear one that obviously the goods originate from the country that's claiming origin in that case. But we also have substantial transformation, and that is where the product is worked in a large way to change it from the components or the raw materials that make up its constituent parts. But again, we have to prove that there's been sufficient working or sufficient processing to change the origin of those products to our country, for the UK in this case. So there are different ways of doing that. Generally, there are three ways. Value-added criterion, we'll look at each of these in a little bit more detail in a moment. Value-added is where you may have bought components or raw materials from a non-originating country, from a third country, but you've added a certain amount of value and processing and other components in your home country, which gives you an added value which is sufficient to claim nationalisation of the product. The second way is by the change of the tariff heading. So you buy goods under one tariff heading and you process them in your country and change the tariff heading into something different. And again, that can then allow nationalisation of the product so it gets its passport for a UK product of origin. And some agreements, there are specific criterion, for example, for textile products, so that if, for example, yarn has been turned into fabric, then that can be a change of origin, even if it's not really a change of the tariff heading. So there are three different ways there that you can prove that the product has been sufficiently worked or processed to claim origin within Wales, within the UK. So here's an example of changing the tariff classification code. So we've imported, in this case, flour under HS code 11.01 and butter under HS code 0405, and we've turned that into a bread, a toasted bread. The example here is Thailand and Japan, but this could be the EU to Japan just the same. So, and we've added other materials locally, and we've produced the bread, and that gives us enough of a change. It's a change in the tariff code, the HS code of the product, so that it complies then with the Japan, Thailand, or Japan EU EPA, Economic Partnership Agreement. And then you can confer local origin on that product because you've changed the tariff code. Next is the value added calculation. So here we are importing quite a lot of non-originating material, but within our country, we're actually adding value. We're adding originating materials, we're adding labour costs, we're adding other costs, and so on, plus profit. And all of that adds up to a sufficient proportion of the product to allow us to claim added value so that it becomes a local product, not from the original or non-originating material. So this is the way we calculate to claim origin for the UK, for example. Lastly, we've got specific processing, and this applies regardless of whether the HS classification changes, but only if a specific manufacturing process has been agreed in the free trade agreement, and if that's been performed within the country. So as I mentioned, turning yarn into fabric, for example, that process, and some agreements, it may not change the HS classification, but it's agreed that that is a specific processing which confers local origin on the product. But this will differ in every trade agreement, and it's specific to the trade agreements themselves. So is it worth the effort? Well, depending on the complexity, it can be costly to substantiate preferential origin. In 2013, the Trade and Investment Balance of Competence Review found that admin and compliance costs can be between 4 and 15%, and can therefore outweigh the benefits of duty reduction. It's important to analyse what the costs are going to be. It's up to you whether you actually follow preferential rates or decide that the most, just going under WTO rules with less obligations is more beneficial for you. The CEO of the Chemical Industries Association stated in the House of Lords report that due to the complicated processes involved in the chemicals, the cost of providing the technical proof would clearly outweigh the benefits of duty-free sales. So as we can see, it's not a foregone conclusion that claiming preferential origin is going to be cost effective. It just depends what those non-preferential duty rates are and the costs that you would have to incur in claiming preferential origin. So we'd like to just now do another poll, if we may, to see how you feel, how you view your how complicated your supply chain is for your products. So it would be interesting for us to see, so we know which areas are going to be most complicated. Okay. Oh, that's quite interesting. We can see that there's quite a lot of people here. 48% have got a minority of product which is originating within the country, and then they're adding a local processing. So the complications that we're talking about really are going to affect, or could affect, a number of you out there. Thank you very much for that. Okay, so now we'll have a look at how rules of origin work in practice. We'll look at the exporter responsibilities and the importer responsibilities, so we can see the variation between the two. Exporter responsibilities. Firstly, responsibility to, if you're exporting, to determine the product HS code, the tariff code for your product and export, and then to check the origin rules which apply. Now, there's a good government website there, which you can see the web address there. You can go into there, you can tell it which country you're exporting to, and tell it the HS code, and it will give you the details of any duty rates that apply, any trade agreements that apply, so that you can actually, it's a starting point for you to follow, so you know what's required. And then from there, you'll know whether you have to verify the origin of your goods and how you have to do that, and whether preferential or non-preferential duties apply, and which ones you want to apply. If it's worthwhile applying for the preferential rate or not. Next, you have to obtain a relevant certificate of origin. If it's non-preferential terms, generally you can get that quite easily and quickly from the Chamber of Commerce or an e-certificate. Under preferential rate, you can also go to the Chamber of Commerce, but you may need something called an EUR1 or a Form A. EUR1 is also known as a movement certificate and confirms the certificate of origin under the EU free trade agreements. Form A is a similar kind of thing, but for non-EU and GSP countries. So, and then we also have the REX exporter system. So it's a European system where for registered exporters, you register and you can self-certify then the statement of origin, but only if you've been registered and approved on that register previously. There is also a system called authorized exporter, and that simplifies the export procedures and allows you to self-certify preferential origin by an invoice declaration, so that you then don't need an EUR1. Again, there's an application process you need to go through for that, and you do still need to be able to prove origin. We did have a question emailed in from one of you before the webinar, asking about this particular point. You'd actually asked for some information from HMRC, and the answer to your question was that yes, even if you apply for or you decide to go for the non-preferential route, you will still need to prove the origin of the product, and you do need to check again on the rules of origin that would apply in that case. But we will provide a fuller answer for you after the webinar. So next, you have to comply with other origin requirements, for example, shipping, invoicing, and labeling. Each free trade agreement will have a requirement of the procedure, as it's called, as to what you need to follow to be able to confer preferential origin on your products and to claim preferential duty rates. From an importer point of view, you have to check with the exporter whether the goods do meet the origin or the criteria for the preferential tariff. You need to satisfy yourself that this is the case, and that they request the evidence and proof of origin to be sent with the goods. So you need a certificate of origin, but it's also worthwhile to actually check a little bit deeper with the exporter that the goods do actually meet the origin and then not just claiming it, because legally you are liable. You are responsible for the accuracy of the documents that arrive when goods are imported. So it's you that's importing, it's you that's paying the preferential duty rate. So it's you that has to ensure that, as far as possible, that rule of origin that you've been is correct. You are legally liable for ensuring the accuracy, and you do bear the consequences if not. You also have to retain the documents for the retention period, which is in the agreements, often that's 5 years. So you have to keep all documentation for that period of time. So again, it's important that you do follow these rules and keep the information. And it could well be that you will get a request for further information from a particular government, for example, or trade body. So don't assume that you won't. You could well do. It's best to keep the information. So next, we're going to look at how you actually determine and claim origin. It can be complicated, and we'll look at the rules of origin flowchart and how you actually go about it in practice. So I said it can be complicated. If we look at this diagram, we can see the complications that Boeing would have for their Dreamliner because of all the different countries where the products come from. As you can see, the wings come from Japan, the center fuselage comes from Italy, landing gear from the UK, main landing gear from Japan, and so on. You can see there are lists of countries that make up the suppliers for this particular product. So Korea, Japan, Australia, USA, Italy, France, UK, Canada, Sweden. So the people at Boeing have got to take all of that into account when claiming the origin of their product. Now, there are some special agreements for aircraft, I do realise that, but this shows the potential complications of different suppliers in different countries making up a product like this, and what you have to take into account. So we'll try and pull it all together a little bit now for you to show what you have to do to prove your rules of origin, prove the origin of your product. So we start with rules of origin. There are three major elements to rules of origin. We've already looked at the origin criteria, which we'll go through in a bit more detail again in a moment. And then there's also consignment criteria. And that's where a free trade agreement will often stipulate that goods have to be shipped directly from one country to another in order to be relevant for preferential origin and preferential duty rates. And the reason for that is to make sure that goods don't leave one country and then turn up in another country being something completely different, although because it's been transshipped somewhere and something's been substituted. So there are often within agreements that the consignment should be shipped directly, unless of course it's not feasible to do that and there needs to be transshipment, then that again will be covered in an agreement. But it is something that you do need to check. You need to be aware of the actual shipping requirements as part of rules of origin. Then there are procedural provisions. So the free trade agreement will say what procedures you need to follow in order to be able to claim preferential rule of origin. For example, the certificate of origin, what transport documents are required, everything that you need to do that needs to go with the shipment in order to comply with the rules of origin. So going back to the origin criteria, as we've already seen, there are different ways of proving that your origin is UK in our case. So for example, the wholly obtained or produced goods, which is relatively straightforward, but relatively rare. Goods produced exclusively from originating materials. Again, it's not that often that you find that these days. Or more likely that the goods satisfy the substantial transformation criteria. And as we've seen, there are three main ways of doing that. There's a change in the tariff classification criterion, the value added criterion, so the amount of extra that you're putting into the product in the UK, or the specific manufacturing or processing operation criterion, which is specified in the agreement and is applicable and is allowed under the terms of the trade agreement. But there are some exceptions to the substantial transformation criterion, and again, these will be included in any free trade agreement, but you do need to follow them, you do need to consider them when you're looking at claiming preferential origin. For example, there's something called accumulation. Now, accumulation is where the parties to a free trade agreement agree that the signatories can source from each other's country or a specified third country and count those products as originating. So for example, at the moment, currently, any EU goods which we make into products in the UK count as British and vice versa. That's known as bilateral accumulation as part of the effectively free trade agreement that we have with the EU at the moment. And you can also get situations where the free trade agreement will allow what's called diagonal accumulation. And that's similar to above, but where both parties, so in this case the EU and the UK, have a free trade agreement with a third country, say Japan. And we agree that goods from Japan will count as British or EU in terms of preference, in terms of claiming the origin of your products. So this is a different type of agreement where a third party can be involved, and that will allow you to claim origin of your products, even though a proportion or a higher proportion of the actual components, materials, do not come from your country, don't come from the UK in this case. And this we'll see is one of the reasons why rules of origin are really important for post-Brexit, because at the moment, as we've seen, EU goods count as British so that we can claim British or EU origin. But when we leave the European Union, unless that's included in the free trade agreement, then we won't be able to do that, and we'll have to use just UK source products as our way of conferring British origin. And that may be a little bit more difficult than some of us think. And that's something we'll have a look at a little bit later on. So the other exceptions that can be written into trade agreements are what's called de minimis, and that's a tolerance rules which allows certain value or volume of non-originating content without affecting the origin. Usually that's around 10 to 15%, but again, it depends on every agreement is different. So, but basically what that means is you can have 10 or 15% of raw materials or components that are sourced from a third country, and it doesn't matter. You can still confer UK origin on that without any difficulties, without having to specify exactly what that is. And then we also have what's called non-qualifying operations. And again, these will be written into the agreement, and they're designed to stop minimal amounts of operations being carried out to try and claim origin. So, for example, there are things like packaging, labeling, or just assembling the products are usually written down in free trade agreements as non-qualifying operations, so that they would not qualify as a significant or a substantial transformation of the product. It needs to be something more than that. And often there are specific operations which are specified within the agreement to make sure that we don't try and get around that, or people don't try and get around that. So that's the sort of flow chart, if you like, of claiming origin. You need to look at all areas, look at goods, the components that make up your product, and see whether you're changing your tariff classification, whether you're adding sufficient value to the product, or you're complying with a specific manufacturing process that's agreed in the free trade agreement. So, the Brexit effect. What changes are going to happen after Brexit, and what will be the effect of that? This is the critical point that we've touched on a little bit, but we do need to look at that a little bit further. In fact, rules of origin, in my opinion, is going to be one of the biggest Brexit challenges. It's one of the hidden challenges that no one really has talked about, but it could be something which is very significant for, depending on whether the free trade agreements include some element of accumulation that we've just been looking at. So, what changes after Brexit? Firstly, obviously the UK leaves the customs union. The UK becomes a third-party country to the EU, so we're no longer an EU country, and origin cannot be claimed as EU, it needs to be claimed as British. So, and even if we do have a free trade agreement with the EU, as we've seen, all free trade agreements include rules of origin in order to be able to apply preferential rates of duty on your products. So rules of origin will continue to apply. They will definitely apply irrespective of whether we have an agreement with the EU or whether we fall out of the EU and fall onto WTO rules. We will also lose our access to all of the EU free trade agreements with other countries. So, you know, for example, with Japan, with Canada, 39 or so trade agreements the EU has with other countries around the world. And at the moment, the UK government's intention is to mirror those agreements, is to sign new agreements with those countries. But it's not straightforward, and it's not certain that every country will immediately agree, certainly by the deadline at the end of this year. With everything that's happened with COVID and so on, things are, you know, getting very stretched, very pushed, and like a lot of companies, I don't feel the government is completely prepared for this. Hopefully they will get there. The other thing is that supplies from the EU may become foreign and not national for rule of origin purposes. So as we saw earlier, At the moment, any goods that you include in your products that come from the EU are classed as UK because we're part of the EU, so that you can use those as part of your rule of origin for the product. After we leave the EU, that won't be the case, again, unless the free trade agreement or any free trade agreement includes that as an important factor. So what will be the effect? So even if we do have a free trade agreement, as we said, we'll need to prove UK origin. There could be considerable compliance costs, admin, legal and audit costs. We've seen the estimates are between 4 and 15% of the value. And there's also potential disruption to just-in-time supply. You may have to, if you've got to prove origin, or if there's any check on the origin of the product as they're leaving the UK or entering the UK, then this could disrupt supply chains if you haven't followed the procedures correctly. And for many companies, this will be new. It's not something they've done before. It's estimated that around 135,000 UK businesses have only ever exported to the EU, and are therefore of no or very limited experience of rules of origin. They've never really had to deal with it. So hopefully it's not going to blow everyone's minds like the guy in the picture, but it is something which is we're going to have to become more used to and conversant with, and be able to be able to give rules of origin, certificates of origin for our products. So we've looked at UK exports with significant non-UK components may struggle to qualify as British. This is the key point, I think, of the changes that could affect everyone, and that needs to be clearly looked at by every company that's exporting. For example, vehicles, textiles, chemicals, food, machinery, they may have significant non-UK components, which will make claiming British origin difficult. So we have an example here. Mike Hawes, the CEO of the Society of Motor Manufacturers and Traders, said that there is a danger of UK-built cars will not qualify as British under a normal free trade agreement. And that's because, his quote here, generally rules of origin require around 50 to 55% local content. But currently in the UK, the average car has about 41% local content. So on that basis, they would not comply. In fact, it's even worse than that. Because of that local content, the 41%, it's reckoned that only 20 to 25% of that is actually British. Some of it is actually foreign origin as well. So the people they're buying from would have to advise that part of the product is not British. So it's a difficult situation. It may be that it's very difficult in that instance to be able to claim UK origin for the product. Now, how big a problem is it? Well, we can see there's a graph here where there's an estimate of the percentage of foreign inputs into different UK sectors. And we can see coke, petrol, computers, metals, electrical equipment, transport equipment, autos, chemicals. All of those are very close to this 50% borderline, if that's the level that's agreed in a free trade, or in the free trade agreement, if there is one. And others, chemicals, machinery and equipment and so on, rubber and plastics. There's a lot of industries there that are very close to the margin in terms of the amount of foreign or non-originating components and materials that go into their products, which would make it difficult to actually claim UK origin. And what we're also showing on this graph is, in red, is the estimated percentage that comes from the EU. So, although in computers there's 60% nearly that is foreign inputs, a percentage of that actually comes from the EU. So if we do get a free trade agreement with the EU, which allows EU components or EU materials to be considered as British in terms of rules of origin, then that would save the situation and would allow UK origin to be conferred on your products. But as you can see, it's very important that we do get that agreement and that this level of bilateral accumulation is included in the agreement in order to avoid a lot of potential headaches for a lot of companies. It's fair to say that for some companies it's already causing palpitations where they know this, but it's something that everyone needs to look at of their products and make sure that they're going to be able to comply moving forward. So it's not certain that the EU will agree to EU value added or accumulation counting towards UK origin as it does now. It's obviously one of the negotiation points, but it's not certainly certain at this moment in time that will happen. And so it's something that we do really need to look at and maybe need to consider, if it does go the wrong way, how we're going to overcome that particular hurdle. Even if we do replicate the EU's free trade agreements with other countries, UK origin may not include EU value added or accumulation as it does now. So if we get an agreement with a third country like Canada, for example, it's not certain that they will allow EU sourced goods to be counted as British. So again, this all comes down to the negotiation of the free trade agreements, and every free trade agreement may be different, and the thresholds may be different in each agreement to allow the bestowing of local origin. The same would apply to EU exporters to the UK, of course. If there's no agreement, they wouldn't be able to claim that UK origin products were EU any further. But it's reckoned that that's less of a problem for them than it is for UK companies, because they're not so dependent as we are here. So any new agreement really does need to include EU value added, or the 50% threshold that's common in most free trade agreements needs to be reduced. But it's not certain that anyone's going to agree to that, and there are a lot of obstacles involved, and absolutely no guarantees that it can be achieved. So what we can see is that this is a major area that could have detrimental effects on business moving forward. So in summary, rules of origin can be very complicated. We've seen that the way you actually have to calculate origin can mean looking at how the quantity of foreign content that you've got in your products, the percentage of value added you're adding to your products to make sure that you go above the threshold to be able to claim UK origin. This is the crux of the matter, and again, it will depend on the free trade agreements that are agreed after the end of the transition period. We've already left the EU effectively, but after the end of this transition period at the end of the year, which is coming upon us very, very quickly. It's important to note that the importer is legally responsible. So if you are importing goods and someone's claims that it's origin from one particular country, they have to prove it to you, but you are legally responsible to the UK authorities for claiming origin and for claiming reduced or preferential duties. So it's important that we fully understand the principles of origin, understand how we can claim it and what will apply and what won't apply. And we need to look at every free trade agreement because each one is slightly different, as we've said. It's different rules, different processings which can be included, different barriers and so on, different thresholds. So there is proof that's required to obtain the certificate of origin. When you apply for one, you will need to provide proof, and you may well at some point or could get audited where you'll have to provide the information. You have to provide invoices and details of your production to show that you are actually eligible for the origin that you're claiming. So we've seen a real lot still depends on the EU UK free trade agreement. It really is important that we get that accumulation effect in there in order to avoid this problem of being able to claim UK origin for our products. And a lot still depends on the UK and other countries, our free trade agreements with them. Again, it's not certain what those are going to include, and we need to make sure that it has the right content so that we avoid as many problems as possible. But no matter what, a certificate of origin will be required, and this can lead and will lead to further costs and potential complications in trading internationally. And it's something which I urge you to take seriously and to look into before we get to the deadline. It's best to be prepared as far as possible and to make sure that you're not going to be caught out when we get nearer the time. Of course, this is a moving feast. As free trade agreements are agreed, things will change. This government website we mentioned earlier is constantly updated, so you'll be able to find regular information there. And that guides you to the other sources of information for each of the free trade agreements, for example. It shows you the duty rates for preferential and non-preferential and the rules that apply. Okay, we're now going to move on to any questions. Thank you for your time. I hope that has stimulated some thought and has proved interesting. And I'm happy to take any questions.
Hi, Mike. We have got one question which has been posted. A company buys Siemens equipment from Siemens UK. Does this comply as UK sourced goods?
It depends if Siemens UK are going to say that it's a UK origin product. If they've just bought it in from Germany and it's a German origin product, then they won't be able to claim just by selling it on that it's a UK origin. So it depends on where that product has been sourced from.
Okay, thank you. If anybody has any other questions for Mike, if you could pop them into the Q&A, and I will read them out, and hopefully we can get back to you. So we'll just give a few minutes to see if anybody else wants to ask any questions. Just to let everybody know, we will be sending copies of the presentation around after the webinar. Okay, we've got a few questions in. So, sorry, Kevin. Sorry, Mike. Would you like to take these questions?
Yeah, sure. So the first one I can say is product specification will be just as big a problem. Yes, I mean it's all linked together, I guess, isn't it? The specification of your product. I'm not quite sure exactly what you're meaning by that, but again, you'll have to prove that the origin of the product, the specification, the components that go into the product are from majority will comply with the rules of origin that are any free trade agreement. Sorry. So the next one, we buy from Candy in China, and the label is made in China and store in the UK and export back to Europe. Can we use the original certificate of origin from China, or do we need a new one to export? No, I mean, you're not trying to change the origin there. It's remaining as it's from China. So there's no problem with that. You can use the original certificate of origin. You would only need a new one if you were trying to claim that it was a UK origin product, and then you would have to prove that the origin had changed, that you'd done something to the product to make it change. But in this case, you're only passing it on, if you like. So you can use the same certificate of origin, but of course you can't claim any preferential duty rates that might apply. So, is that still, another question is there still a 2080 rule? Again, I'm not quite sure what you're referring to there. I mean, the thresholds that will be involved in claiming rule of origin will depend on the free trade agreements. Normally it's around 50%. But that does depend on the different free trade agreements.
Now we've got another question here, Mike, about the limits on the assembly labour costs that can be considered for value-added calculation.
Yeah, I don't. Again, that will be specified may be specified in free trade agreements. But as a general rule, it's looking at what's reasonable and what's feasible, and that you're not over egging that basically, and and claiming it when it doesn't comply. But of course, you've also got to show the value of non-originating products and as a percentage of your overall cost. So it'll stand out like a sore thumb, I guess, if you try and overemphasize labour.
Okay. As another question here, we have a customs authorization GB number to give our products EC preferential origin. Will this change to say UK preferential origin eventually?
Yes, it will. Yes, because we won't be able to claim EC preferential origin anymore. It won't apply to UK goods. It'll only apply as the UK good where we have a free trade agreement with a country, and not to do with the EC at all. So we won't be able to claim that anything to do with EU origin or EC origin.
Okay, thank you. Another question here, would a commodity trader that supplies clients abroad with British goods need to obtain certificates, or would that be the producer supplier's job?
Yeah, I mean, normally that would be the producer or the supplier's job. So it wouldn't be the trader. You wouldn't have to, but it would be up to you to get that information, get that certification from your supplier, and also your job to ensure that that is accurate and true before passing it on. But it's not your job to actually get the certificate, if you like. It should be the supplier that does that.
Okay, and we've got one question here about converting raw materials to finished goods. Do we need a bit more information on that question, do you think? Or?
Yes, a little bit, I think, yeah.
Yeah. Okay, sorry. If we could have somebody to resubmit the question with a bit more information, please, that'd be great. And then, sorry, there's a follow-on one from the GB number, just to say that they import their raw steel from the EU and UK suppliers and change into a finished product with a different HS code. So I don't know if that changes the answer at all.
Yeah, if you're changing the HS code, then you can, it's easier to say it's UK origin, but you still won't be able to say it's EU origin because we won't be part of the EU, so it won't be an EU product, it'll be a UK product.
Okay. I've got another question here. If we imported a steel tube from the US and bent it into form, is that likely to be enough processing to claim UK origin?
Again, that's something that's difficult to answer because it would depend on the free trade agreement that have been entered into and which country you're sending it to. It could do if it's changing the HS code, or if in the free trade agreement it's seen as sufficient processing or adding sufficient value to the product to change the origin. So the answer is it could be, but it depends on the free trade agreements.
Okay, thank you. And the last question we've got here is 50 to 50% local content required for CEO. Was that including labour, profit, etc., or was that just the more material of origin?
No, that's also including the labour and so on. You can add in all of your costs. You can add in some proportion of profit as well. So yeah, again, it depends what's agreed in the free trade agreement, but it's not just materials. It's everything to do with the value of that product when you sell it. Okay,
thank you. If anybody's got any more questions, if they can post them. Just to repeat that, the webinar has been recorded, and we will be sending the presentation round. So if anybody has got any other questions, we can perhaps, we're ahead of schedule, so we can draw the webinar to a close. Has anybody else got anything to ask? No, okay. Well, Mike, thank you very much for today's presentation. It's very informative. It's a very technical subject, which I know will create lots more questions from companies as we move and our trading agreements change. Just to say to everybody, if we just have the last slide, please, Mike. Just to say to everybody, but we'll be writing out to you with some feedback forms. If you could complete those and return them to us, I'd appreciate it. And also that if you do need any assistance, please either contact your international trade advisor or the contact details on the slide here, the phone number 03006 03000. We can get somebody to contact you. Also, we got there on the slide is a picture, is the link to our the Business Wales export zone, where you can find out more information about exporting, as well as access to our export hub and our program of overseas events, which are currently running virtual due to the current pandemic. So thank you again, everybody, for joining today. Again, a big thank you, Mike, for taking us through a very complicated subject, and we look forward to see you again on the next webinar. Thank you, everybody.
Thank you.